Hello and welcome to my channel, The Day Tradester. On this channel, I record my buying and selling activities that I perform on two of my accounts. One account is an account that I funded last week. It's a retirement account. And I use that account to record my trading activities that in hopes it will inspire people who do not have an account to open a retirement account, because I want them to see with absolute certainty that they can change their life over time. I want them to see their future through different lenses. But those aren't the only people I want to help see their future through different lenses. I want to see people who are trying to day trade, but they're failing miserably at it. I record my activities because I'm profitable, and I have been profitable since I actually started trading pretty much 2.5 years ago. Today's video is going to be a short video. Recently, over the last couple of weeks, my videos have been over an hour long because there's been quite a bit to do. But I don't have many sell alerts. Actually, I have no sell alerts that I received this morning for the account where I've been trading and swing trading. That makes up the majority of the overall body of work that I've created here on YouTube. Like I said yesterday, last week, I added the $25 a week account. So this will be the second video with that particular account. And there's not much to do in there either, since I only have $25. So we'll start off with the $25 a week account. Okay, in my $25 a week account, my current balance is $26.15. Last week, I bought 3 shares of silver core metals. So we currently have a gain of just shy of $1.15. So let's go ahead and pull this up on the chart. Let's cancel that out. All right, so I'll pull up SVM. And we'll expand this out, the cell. You can see silver core metals has had a pretty decent run over the last 3 months. And today we're currently looking at a nice move today. Actually, we expand this back out. It is the second largest move in the last 3 months. It is a larger move than we had just a little over a week ago. So let's zoom in and take a closer look. Silver core metals had been in a downtrend for the last week and a half, roughly. Hopefully this move today is the beginning of a nice little turnaround. We could see that we have a bounce off of a highly traded zone. So I'm going to add a drawing. And it's just going to be a small box. And there we have that. I'm going to change the color. So we're going to edit the properties. And we want to change the color to something a little bit more visible. Just regular white will be fine. It is actually a white box, except it's on a blue background. So taking a look at last price action as it came down, you can see where it came down into the zone and bounced off 1, 2. We'll say it broke through, but eventually the price moved back up and closed by the end of the day within the zone. So that would be 3. This went through it, but then the next day it had gapped, broke through it, and then later that day it ended up rising for the day. So we actually have 4, 5, 6, 7, 8 times. If we count this candle, that's 9, and that's 10. So this is a zone of a lot of activity. So this is clearly a zone of support for silver core metals. Now I'm just going to hold these 3 shares for SVM. As long as it's going up, I'm going to hold. We're going to take a look at it tomorrow. If price turns around on me, then I'll probably sell. Now the thing about buying and selling in an account right now that has less than $25,000, I cannot buy and sell the same equity on the same day, nor can I sell and buy it on the same day. So if I sell SVM, I'm going to buy something else, and it's probably more than likely going to be an ETF connected and indexed to the S&P 500. There are very few stocks that I can purchase at $25 or $50, and there's even less so within the 250 companies that I have that I trade within. So just buying and selling right now when we have very little money is the safest place is the S&P 500, and there are dozens of ETFs that are as low as $28 that will get us into the S&P 500, which is the main index. It sets the standard for whether ETFs and funds for comparison should either equal or be better or less than. The S&P 500 is the benchmark, so as new traders and new investors, it is the easiest thing to trade. And that's it. That's all the activity for the $25 account. All right, now going back to my regular trading account that I've created almost all of the videos for, I currently only have $310 available, and all of that I need to keep for my day trading activities for stocks that I use to day trade. And since I do not have any sell alerts, I do not have any activity that I'll be able to perform in this account for purposes of this video. However, I do have 19 buy alerts that I received this morning, and I would like to purchase some of the stocks that I received these alerts on. But since the main purpose of my strategy, I'm acting as an investor, any of the stocks that I actually have going down right now, I do not sell if I was unable to sell them at a profit. So I'm holding those bags until price turns around. But we'll go ahead and take a look at the S&P 500. And that is SPX. SPX. And let's look at the 3-month activity. Expand this out. Don't know why it's not. Should expand on a double click of my mouse, but it isn't. So there it goes. I don't know what happened there. That's happening a little bit more frequently. So for 3 months, again, you can see that we are overall in a bullish uptrend. Zooming in here, you can see I already have some zones set. You can see looking at this candle, let's drag this out. You can see where price on Friday, price moved down into this zone of support and it bounced back out of it. And then we've been going up for the last 2 days. We gapped up. We closed about 66.03 on Friday and we opened around 66.36. So we'll just call it $30. And a couple of reasons that we're moving today possibly is because Tesla, first thing this morning, Elon, he had a tweet and he was reminding everybody about how much AI that the Tesla is actually using and how many chips they have and how his team is a team of experts doing amazing work within the AI chip creation and design and manufacture. And that's going to be their next leg of major movement within the, I guess it's going to be more robotic sector, but it's within the car industry for their self-driving cars. So Tesla investors like that. And also a little bit shorter or a little bit later than that, earlier this morning, Donald Trump put out a tweet saying that he's going to be meeting next year with President Xi Jinping. He's going to be meeting him in China. So the market likes that because the market wants resolutions. They don't want conflict. And then there was also news about the Russia and Ukraine war possibly coming to an end. Markets like good news a lot more than they like bad news. So it's quite possibly those 3 things that came out earlier this morning, along with the other sentiment data that's been released. But whatever it is, I like it. Hopefully, if you're an investor and you're in the markets and you're pretty much a longs holder, you're enjoying today as well. If you currently do not have an account, whether you want a retirement account or a regular brokerage account where you can just trade stocks, this might be a good opportunity. Go ahead and do some research. Do not take this as advice. I'm just a regular Joe out here who's making a little bit of money, and I hope that I can inspire you to open accounts and make money as well. Not as a day trader, but as an investor. All right, let's go ahead and take a look at the heat map. Well, I guess first we'll take a look at my earnings. I want the all account positions, and I have Keysight Technologies, and Zoom going to earnings this afternoon. Unfortunately, the current price is lower than all of my purchase prices that I had for the stocks within those 2 companies. So the only thing I'll be able to do is set some sell orders for each of these, and we'll make it over to our heat map we want to visualize today. Well, I thought there was going to actually be a lot more green than there is. It's really 3 companies that are really pulling the S&P 500 up. That's Tesla, Google, and Broadcom. Broadcom is having a huge move today. But I was expecting a lot more green than this, given the size of the move and the good news in the S&P 500 and the good news in the markets and the good news in the economy and the good news from Trump and the good news from Elon Musk. But I should take this along with all the other expectations that I had that were not met, things that I thought may have happened within the S&P 500 or within the markets, and I am wrong with those expectations are rarely met. They're usually subverted. So some of the best advice that I can give you as a new investor or possibly a new trader is to do not count your eggs on any expectation that you might have. And do not make any trades based on very short-term expectations, because more likely than not, it'll go against you. All right, so going back to my chart, we're going to look up keys, Keys, see where they are. All right, so I currently have 4 shares. I'm maxed out with 1 share for each book, and since we actually had the price move today, it moved up on us. I do have 1 share that I'll be able to sell. Now, if you're new to my videos, any stock that I have going to earnings, I look to try to sell at least half of the shares that I have, or rather up to. I won't sell more than half. I always want to keep some shares just in case price goes up, but I sell up to half of my shares that I have as a de-risking move. Now, I currently have 1 share already sitting in a sell order, but this is one that I purchased at the highest price, so we're going to cancel that. So I'm going to come in and create a ticket order. We're looking to sell 1 share at 177.60 or 86. Confirm and send. So I sold that one at 177 and I bought it at 175. So that's $2 in realized gains. And looking at my notes on the wall, oh, nope, I have another one that I will be able to sell keys at a profit. So I will be selling 1 more. Thought I was going to be setting a sell order for this. And that one I purchased at 175. So 175 to 178, that one is $3. So total $5 in realized gains on the sale of 2 shares for Keysight Technologies. So I've sold half of the shares that I have for Keysight Technologies, and this is what I do for every stock going into earnings. And I keep half of the shares just in case price moves in the direction. That way I'll at least have some stocks making some gains. Now, I believe Zoom, all of my shares are much higher purchase price than the current price. So let's take a look at Zoom. And I purchased all of my Zoom shares at $88, $89, we'll just say $89. Current price is $78.95. With Zoom, I believe I am maxed out with 8 shares. That's 2 shares for each book. So I'm going to create sell orders for 2 books, just in case price spikes all the way up to that level of my purchase before it starts to move back down. Sometimes stocks can frequently spike way up before it ultimately either levels off or turns back down. So we're going to create a sell order, and I bought Zoom. I bought 6 shares at $88.80 and 2 shares at $89. So I'm going to set a sell order for 4 shares. We're looking to sell 4 shares. And I purchased Zoom, those 4 shares at $88.88. So the first place digit is in the tens place, and that's an 8. 10% of 80 is 8. So I add 8 cents to my purchase price, making it $88.88. So that's my sell order, $88.88. Good to cancel extended hours, confirm and send. And there's my sell order for 4 shares of Zoom, just in case price spikes way up and it nabs that, will at least have some profit. But more importantly, that money, if it does spike up and then level off and turn back down, that money will be added to the overall balance. And I might be able to purchase some additional shares tomorrow morning. Now, since I sold 2 shares of Keysight Technologies, and both of those, we'll just call it 175. So I have $300 now to actually purchase some stocks. So I'm going to take a look at an ETF, XLV, because healthcare is on the move right now. This is an ETF for the healthcare sector. Current price for XLV is $155.35. So I'll be able to purchase 2 shares. Let's see how many shares I currently own of XLV. All right, it is currently not in alphabetical order. Let me put it in alphabetical order. XLV. I currently have 1 share. So I'm going to purchase 2 shares of XLV. Current price is, well, just for the 2 shares, will be right around $310. And I've added 2 shares of XLV. Like I said, healthcare is on the move. I do own individual stocks in the healthcare industry, but I can't add to those because most of the stocks I have are priced higher than $155 a share. Okay, so now let's take a look that we actually did have some actions. Might as well update all of that. Now, closing this up. So I ended up selling some shares of Keysight Technologies. We put sell orders on Zoom, and I ended up purchasing shares of XLV. So now that it's 10 minutes after 4, let's go ahead and take a look at each of those. We'll take a look at Keys first and see what they're doing after hours. I need to come in and get my 1-day, 1-minute chart. Well, they had a great earnings. Look at that. So they went from 177 all the way up to 190 right now. So we're looking at a $13 gain for the Keysight Technologies, and I have 2 shares currently sitting in Keys. And right now, both of those shares are sitting at a profit. Keysight Technologies, they design and manufacture all types of electric equipment, components, and testing equipment for telecommunications companies and other software industries, or software-related industries like aerospace, the auto sector, and especially defense sector. If you don't own Keys right now, you might want to consider do some research. Since there's going to be a huge buildup back into the defensive sector, meaning the Defense Department back into munitions and rearming companies and the militaries and militaries around the world. They might be in an upswing for the near future. So do your own research, take a look. Do not take this as financial advice. I'm just showing you what I do and how I trade and what I trade and why. And maybe you too might want to own some Keysight Technologies if you're able to afford that. And on the opposite side of the spectrum, we were looking at Zoom. Zoom is having a good day as well. They've gone from $79, we'll say roughly, we'll call it 79, up to 81. That's a $2 move for Zoom. So the same thing is true of Zoom. If you don't own that, do your own research, take a look. Maybe it's something you want to buy. I just happen to be holding bags that I purchased at, again, back at $89. Let's see how long, if we could tell how long I've been holding them. I have to go back into, we'll start with the 1 year, 1 day. So it's been even back in the last time I would have made any purchase of Zoom is back here around February, early first week of February, February 7th. And the reason you can't see where I purchased them, I transferred 8 shares back here when I opened this account. We'll zoom in. When I opened this account, I transferred all the shares from my old account to the new account, and this was back on August 18th and 19th. And that's why there's a 0 next to the 8. At any rate, take a look, do your own research. Maybe you might want to buy some of these and have them in your own portfolio. Now take a look and see what my chart of the day is. We're going to come to the net positions, and CLS, Celestica, by percentage is our best performing stock of the day. We're looking at 42.48% move. So let's take a look at that. CLS, Celestica. So our chart of the day is Celestica. You can see they have been a little rocky, but overall they are on an uptrend. Celestica is pretty much a full service company where they will design and manufacture and provide supply chain solutions for a variety of businesses in a variety of industries, and they'll do a full end-to-end service from beginning to end and after sale warranty and maintenance, I suppose. Like Keysight Technologies, they are affiliated with a variety of industries. Just like Keysight, they're in aerospace, they're in defense, they're in automotive, they're in all types of industrial and healthcare businesses. So they're a pretty big and important company to a variety of industries and other businesses. So again, you might want to consider owning some CLS, some Celestica. Do your own research. I'm not an expert, and this is not financial advice, and I'm not recommending that you buy Celestica. Now, I currently own 3 shares. If I was maxed out on Celestica, I would own 12. So right now, I only have 1 book. I only have 25 shares, or 25% of the shares that I would allot to my overall purchase for Celestica. And if price continues to move, I'll zoom in here. If price for CLS, so Celestica continues to move, and we have the fast moving average cross above the slow moving average, then I more than likely will be buying back into Celestica, and I'll be looking to max out if I have the money to be able to do so. So they've had a big day. This might be their largest move of the last 3 months. Let me come back into my 3-month and 1-day chart. See if there's another big candle. That's the next closest big green candle. So no, this is their biggest single move in the last 3 months. And that might be because Celestica's plants are in China. I'm going to do a little Google research. They've got plants all around the world. So it's not like the news to China was that impactful for Celestica, since they are in Arizona, California, Texas, Mexico, Spain, Oregon, Ireland, and Dongguan, China, Malaysia. Maybe they do a lot of, maybe the majority of their manufacturing is in China. All right, so Google, according to Google, 70% of their manufacturing is in China. So that is why they have such a big move today. Again, let's zoom in. That is why they have such a big move today. That if America and China can resolve their trade differences, then we'll be back. Investors will have a base idea of where they're headed with some type of stability. So let's keep our fingers crossed that that meeting that Trump is planning to have with President Xi Jinping occurs and happens next year. That way we can all make money if we have, or I won't make money. Maybe if you decide to purchase Celestica, maybe you'll make money as well. But that's our chart of the day, and our chart of the day that I put up is the best performing stock of all of the stocks that I own within my portfolio. All right, it's now time to take a look at the results of today's buying and selling activities. We're going to take a look at my overall realized gains and my portfolio performance as of yesterday afternoon. And for today's realized gains, I have a total realized gains of $300.95. That's based on a cost basis of $33,573 and 82 trades today. If you're new to my videos, I don't only just show within the videos of the overall investment strategy and the stocks that I have in long-term investments and also the swing trades, but within this account, I also day trade. But my videos are only for investment and swing trading strategies and ideas. Now, the current portfolio performance in this new account that I opened on August 19th, with all of the assets and stocks and cash that was transferred from the older account into the new account, I am now performing at negative 0.08% compared to the S&P 500 at 2.42%. The old account was 16.2% compared to the S&P 500 at 10.54%. And when we combine the two totals, my overall portfolio performance is 16.18% compared to the S&P 500 at 12.96%, which means I am still outperforming the S&P 500 by 3.22%. Now, if you've been watching my videos, I'm hoping to reduce the amount of my downside price action. I'm reducing the frequency of my buying and selling based only on the daily time frame. I'm no longer just using one chart. I'm going to be using multiple charts to validate and slow my buying and selling practices down on the swing trading side of the markets. If you've watched some of my videos, you've seen that shortly after I've purchased, after there has been a run up, and then the market, the fast moving average dipped back below the slow moving average and then rose back up above, I would be buying back in with all of the stocks that I could to max out my allotted number of stocks for that company. And shortly, a day or two later, it would just turn right back around. So then I'd be holding bags for various amounts of time, depending on the stock and how long the downturn is. So if we go to app 11, you'll see a perfect example. So here is where I would have sold out all of my shares. At this point, I had 6 shares. I sold out because according to the old strategy, whenever my fast moving average crossed below the slow moving average, I look to sell out of everything that I can if I'm able to sell at a profit. And then I wait for the cross back over the slow moving average. That would be the fast moving average crossing back up and above the slow moving average. And that's when I buy back in. And you can see that I bought 2 shares. That's all I had the money for. But then ultimately, I bought back in 10 additional shares. 4 of these shares out of these 10 would have been to total out what I could afford at the time. 3 books for this particular equity. Nope, I'm mistaken. That would have been 2 books, each book being 3 shares. So the other 6 shares that I traded here, they were day trades. But at any rate, I bought back in, price turned back around, and then I've been holding these 6 shares since back here on November 12th. But the problem is we're looking at almost a $70 drop just in that time frame. So I have lots of stocks that I had done this with, that I was only using the daily time frame, and I was only using the fast and slow moving cross as buy and sell signals. And it's been working for roughly 2 years for me. And since I'm acting as an investor, app 11 eventually will rise back up and continue up. So 5 years from now, it wouldn't be unrealistic if at some point in that 5 years, app 11 reached $1,000 and probably had a stock split, or will possibly have a stock split. But the point is I act as an investor and I don't mind holding, but if I'm able to sell out at a profit at a different time and not hold bags, then that's what I'm trying to implement now. And I believe I've got a system by using 4 additional time frames and incorporate those 3 additional time frames, so a total of 4 time frames, and incorporate all the time frames into my decision making on when I would be looking to possibly sell or buy back in. So we'll look at one more. Broadcom, Tesla, Meta will be a good one. So here's another example. You can see where I probably would have bought into Tesla somewhere after this cross, but then by the time it crossed back down, I was unable to sell at a profit, so I'd been holding bags. And then we have another opportunity where Meta price of the fast moving average crossed back above the slow moving average, and I possibly could have bought back in, but then it immediately turned back around and it dropped drastically. So I currently have 3 shares of Meta, and all of those were purchased over $700. Well, excuse me, 2 of those were purchased at right around $780, and one of them was purchased at $670. But the point being, you can see there are frequent times in which price will move back above the slow moving average and rapidly turn back down before I can sell, and I just end up holding bags. So I'm reducing that particular situation from occurring and have taken the opportunity to hold less bags so that I will reduce the speed at which price in my portfolio drops. And that'll be done by holding on to stocks longer and then having another opportunity to sell them at a profit. It would just be at a lower profit, but yet they'll still be sold at a profit. So thank you very much for watching, and please click that like, share, and subscribe button so I can reach more people and possibly inspire them and also help them become profitable traders. Thank you very much, and have an awesome and amazing rest of your evening.